Joining us right now with more on the latest tariff threats is Susan Schwab. She is former U.S. Trade Representative under George W. Bush. Ambassador, thank you for being here today. Looking at what the fallout is from this, the markets seem to be looking at this and thinking, we're not going to get concerned just yet. They seem to think that there will be changes and that 30% likely won't go into full effect. What do you think?
Oh, I must say, after this year, this spring, far be it from me to predict, and I don't get upset if, the deadlines get pushed forward. It takes time to negotiate good trade agreements, and if it's going to take more time, it takes more time. And the market volatility is less of a concern. I'm much more concerned about the nature of the negotiations and what the outcomes are going to be for the competitiveness of U.S. industry and for U.S. exporters and for the consumer and the tax being put on the consumer by import restrictions, tariffs being put in place or potentially being put in place.
The Wall Street Journal has a new survey that it took of economists that suggests the economic fallout is less dire than had been feared. That's at least according to these own economists who have looked at it. Now, maybe that's because a lot of it didn't materialize the way we thought. But that was surprising to see and sort of an interesting note to things today.
So I must say, I am not one who's been chasing after inflation numbers. I think the key is not going to be an inflation increase per se. Remember, that's a technical economist calculation. Rather, I think we will see it in specific sectors, and consumers will see it. I mean, the administration's been talking about $100 billion in new tariff revenues to date, $300 billion this year, even if the calculation that only, quote, 40% is going to be paid by U.S. consumers, that's a $120 billion tax increase, a regressive tax increase to U.S. consumers this year. And where is that going to come? That's going to come in it's going to hit anyone who wants to build or buy a new home, steel, aluminum, probably lumber, that's going to want to outfit that home, refrigerators, washers, dryers, those kinds of things, tools that are going to be used to build that home, anyone who wants to buy an automobile. So we're talking about specific items at this point. And I think, fair to say that retailers are trying really, really hard not to pass through these additional costs right now. And we may not even see a lot of it in the coming quarter. But there will come a point where they can't do that anymore. They can't average out across their inventory. They can't average out the front running that they did, perhaps bringing things in. And for small and medium-sized companies, they're in big trouble already.
When you say you're worried about how this negotiation is taking place, you mean the brute force of some of the things that have been kind of pushed through on this? Or do you mean that now the EU is talking supposedly with Canada and Japan and maybe other countries to try and figure out how they can do more together if things fall apart with us?
Well, I think that's perfectly understandable. I mean, you're talking about industries, agriculture, services, enterprises that have long-standing business relationships that have not been developed overnight in all of these countries, that have them with the United States, U.S. companies that have them in those countries that are worried about seeing them disrupted. And so these countries are trying to establish more open trading relationships with each other. It's not that they're going against us. It's that they're trying to help their own enterprises because they see their own enterprises losing access to this market. And conceivably, if they end up retaliating, their business that they do with U.S. exporters diminishing. And that's going to be, obviously, that'll be on us. So some of it's stylistic, but I think my concerns tend to be more of the, frog in the boiling pot of water variety, which is to say, over time, U.S. enterprises, small, medium, and large businesses becoming less and less globally competitive, losing long-term business relationships. If you look, for example, at the sectoral, not just the country, we've focused very, very much on the country-specific negotiations going on. That's what we talked about last week or over the weekend. Brazil, we're hitting out at Brazil for their domestic politics. They even have a trade deficit with us, for heaven's sakes. They don't have a trade surplus with us.